Dorm Room Fund, aka DRF. You have worked with 500 plus students from undergrad to PhD. Dorm Room Fund now has 8 unicorns and counting.
Yep. When we started DRF in 2012, it was because cloud compute was new. So all of a sudden, you could be sitting in your dorm room at midnight on a Thursday and spin up an AWS instance, and all of a sudden, you've got a software business. We know that there are a ton of unfair advantages that accrue to founders that build on campus. They're surrounded by talent. They have time to build. It's almost like the ultimate hacker house. For a lot of times, people were like, why on earth would you invest in student founders, right? And it's they're too young. They've never worked in industry. And then you look at our track record and it's hitter after hitter after hitter. And we were the second check into Cursor. The shit that these guys are doing at 18, 19, 20, most people don't achieve in a full career.
Well, let's go.
All right.
Molly. Thank you for being
Thank you, Brandon, for having me.
Thank you for being on the podcast. Let's jump right in.
Let's do it.
Last 7 years, Dorm Room Fund, aka DRF.
Thank you.
And thank you for correcting me. You have worked with 500 plus students from undergrad to PhD. And Dorm Room Fund now has 8 unicorns and counting.
Yep.
And since I did my research, I had 5. So you are doing really great things.
Thank you.
So I want to say, what's the current state of student-led companies? What's going on campus today?
Yeah. So I think Dorm Room Fund's original thesis when we founded it, and by the way, I can't take credit for the original idea for this. I mean, I've been with DRF for 7 years now, but this really was Josh Koppelman's baby. He and Finn Barnes were sort of the brains behind DRF 1.0. And the insight that they had was that there are these really interesting moments when there are these big tech shifts, right? And for Josh, he was a Dorm Room Fund founder, not a part of our fund, our dorm room founder, where, the internet was new. And so his whole thing was, he was I was at the right place at the right time with the right skills. And he built a company and took it public after starting it as a junior at Penn. And so if you actually look around the first round partnership, which is where Dorm Room Fund was built and born, there's a bunch of student founders like Bill Trenchard, one of the managing partner now, built 2 companies in college, one of which he sold to Microsoft. Haley did Birchbox at HBS. Finn had his whole shtick with the sort of sneaker crew and the And One gang. So they all really had this experience of these big shifts happen. And it sort of has the effect of almost leveling the playing field, right? Because all of a sudden, it's the people who know how to use the new tech that have the leg up, right? Not necessarily folks that have been in industry for forever and ever. And so Josh's insight was well, we know this happens with some regularity, right? He saw it with the internet. When we started DRF in 2012, it was because cloud compute was new. So all of a sudden, you could be sitting in your dorm room at midnight on a Thursday and spin up an AWS instance, and all of a sudden, you've got a software business, right? And so Josh's thought was well, look, we know that universities already group talent, right? We know that there are a ton of unfair advantages that accrue to founders that build on campus. They're surrounded by talent. They have time to build. It's almost like the ultimate hacker house.
Yeah.
Your food and your food and your housing and yeah. And you've got these professors around teaching you the cutting edge of whatever the bleeding edge of whatever the new technology is. And so basically Josh was how do we find out who's doing the best stuff before anybody else, right? And this was back in 2012 when nobody was investing on campus. They thought we were crazy, right?
Yeah, too young, too mature.
Totally. Pre-seed didn't even exist in 2012, really. It was nascent. And so, I think Josh's other brilliant insight was if you think about who knows who's good, your peers, right? I'm sure you remember.
I remember who was the best, and I also remember who was the worst.
Right, and who was dinking around before they went back to business school or whatever, you know what I mean? And so it was all right, let's harness the power of the social knowledge and the unfair advantage we have of peers, right? But let's soup them up, because traditionally, scout programs had existed, but they were usually for founders, and sometimes it was like, there's a lot of problems with traditional scout models, right? Where it's like the incentives are funky because somebody else is making kind of the decision a lot of times, or like you're a first timer and you don't know how to price anything or how much to put in. And so basically they were like, let's get a team of killers that cover all the best campuses in the ecosystem. And the first round team was in Philly. That's where this was born. So it was like Penn and Drexel and Temple and, Wharton, and they added Princeton. And they were like, let's get a bunch of killers together. We'll interview a bunch of them. This would be really unique because at the time there really wasn't any pathway into venture. And then we'll get them together, have them work as a team because they'll all be good at different stuff.
Mm-hmm.
And then we will be the ones that teach them the basics of the business. And we'll sit on the investment team and we'll help them with their diligence and we'll make sure they're asking the right questions. And so like net, this will be a really cool thing where they learn how to do venture, right? We get to see all the best stuff on campus and like get to skip all the nonsense like, pitch competitions and stuff, which is like, in my opinion, high noise, low signal.
Mm-hmm.
And was really cool for first round at the time is it was like, we'll do these little tiny checks. They were just itty bitty little safe notes. And then if something's really great,
we'll follow on.
Yeah. Right. And so that was like DRF's kind of 101. And so what's been really cool, I joined DRF in 2019. So they did one fund inside of first round that was a 2012 fund. They sort of expanded from Philly to New York to San Francisco and Boston because those are sort of the hubs of where a ton of like really good entrepreneurial talent were happening at some of the best schools in the country. And then I joined in 19 during the second fund when like they had really gotten humming, right? And they'd figured out a bunch of stuff like, how to put a cap on the safe, sort of like, but MF, all this, like we had sort of scale. And so, but what's really neat is that we've seen that sort of leveling of the playing field with a new wave of tech happen over and over and over again, even since I've joined, right? So like it was cloud. It was, I mean, if you look back earlier, the Dormer Fund, it was like, mobile, it was internet, it was all that stuff. But today, two of the really big inflection moments that I've seen since I joined DRF was one during crypto and Web3 early days. Like Berkeley was the center of the universe when it came to blockchain. And so we were seeing like really incredible stuff before anybody else. And then obviously like the AI revolution is just the ultimate example of this, right? Where I don't know about you, but like I'd rather have some, crazy smart undergrad that is on the bleeding edge of, I mean, I remember back in 2017, we had this guy Shrey Gupta on the team who was like in the NLP lab at Stanford before anybody knew what NLP was, right?
Wow.
And like, so we've gotten to see them not only understand who's building really legit and interesting stuff, but also like the folks on our team end up becoming founders too. So it's just a really special time to be investing on campus. I will say like we're less crazy now, right? Like every good.
What does less crazy mean?
Well, like every good like contrarian opinion, at some point you get proven right, and then people jump on the bandwagon, right? And so I think like. For a lot of times, people were like, "Why on earth would you invest in student founders?" Right? And it's like, they're too young. They've never worked in industry. And then you look at our track record, and it's like hitter after hitter after hitter. And so I think in today's market, it's become a lot more consensus that good stuff gets started by really young people.
Mm-hmm.
And so that's why you see all these like scout programs and stuff. But I think what they're lacking is the dorm room fund, machine that we've had.
Let's talk about that.
Yeah.
I have a question around the structure.
Yeah.
So talk about the structure today, maybe even like a glimpse of what it changed from. If I remember, you usually would get like business forward folks who would be on campuses searching for the best people.
Yep.
Now, potentially a lot of those folks are technical.
Totally.
And not only are they searching for the best people, when they graduate, they're going to start their own business. Instead of becoming a VC, like typical business people do, they're becoming founders because they have technical backgrounds.
Totally. Well, so when we started, there really wasn't a path into venture the way that, like, I feel like in 2026, like you and I graduated from undergrad, like right around the Great Recession, right? And so like for us, the cool smart kids went to like McKinsey or like iBanking, right? That was like, was like grabbing the brass ring, right? In 2026, it's like venture is the consensus role that everybody wants, right?
Way less roles than McKinsey and Goldman.
And that's a whole nother conversation. But like, but long story short is, when we started, there really wasn't this pathway into venture that exists today. And so for a lot of these folks, it was a way to learn a business that you couldn't learn anywhere else, right? There wasn't the same kind of like podcasts about venture capital and like AVC, like Brad's blog was like the only one out there, right? And like Josh was writing one, what was it called? Red IVC, right? So for a long time, it was sort of that. But I think what's happening now and what we realized as a fund is that in the old days, when we were inside of first round, we only invested in student founders, right? So what that meant was like you had to have someone on the team that was either an undergrad, an MBA, or a PhD. And what we realized over time was, one, sometimes folks take advantage of all those unfair advantages while they're on campus, but then don't actually raise till after they graduate. So we've expanded the aperture a little bit to make sure that we capture that. But the other thing that we did is that we realized that the folks that were on our investing team, because they're spending at least 2 years with us. We usually take like sophomores or juniors in undergrad, first year MBAs, PhDs with a couple years left on their program. And when they come out of this experience, they've gotten reps, right? They know what good looks like. They've learned from other people's mistakes. They know how to fundraise. And so when they go to build, they build incredible companies, right? And so we got lucky and got a couple of them before they graduated in the old days before we spun out. And so like Tony Aloco, founder of Dandy, like Tony's like my poster boy, right, for that. Like I remember when Tony was building V1 of Dandy and it looked totally different. And like he was a junior on the Penn team and, and now he's an absolute killer. I mean, what was their post-money last time?
Large.
Yeah. And like Will Manitas, another great example, right? Sort of one of venture's great talking heads these days. But Will had a very large exit that Dortmund Fund benefited from. But Will was on our team when he was an undergrad at Olin. And so, and then I think the sort of canonical example of this that we got, so really basically over time, I realized that like I needed to be paying attention to who were the killers on the team and basically be there to be their first check and their first pair of hands to help them. And I think they recognized over time that we had sort of developed this ability to help them raise their later on rounds that was hard to beat because of the whole Dortmund Fund network. And so the sort of early example of us backing an alum even after school was we were the second check into Cursor. Because Michael Truell was on our team. I picked him as a sophomore to join us at MIT when he was, back in 2019, I want to say, or 2020.
Because we talked behind the scenes a lot about this being your braces off moment.
Yeah.
If you will, at least in my opinion.
Yeah.
You said braces off.
Yeah.
I heard we have Cursor.
I mean, we definitely, I think it's more than just Cursor, but like I have been joking. It's like, and this will prove my like millennial bona fides right now, but like there was like that Rachel Lee Cook movie, She's All That.
Yeah.
You know the one I'm talking about? And like Rachel goes from being like, like glasses, braces, dorky, all of a sudden she gets contacts and her braces off and everybody's like, yo, like.
She's all that.
Yeah. And so I feel like Dortmund Fund had our like braces off, got contacts moment in the last, like, I'd say in the last like 18 months, 2 years, right? And like, part of it is, getting in early at Cursor, right? And like having that be such an astonishing success and like so proud of Mike and the team and what they've done. And we've been so lucky to be on that ride with them. But I think also it's just like there's just hitter after hitter after hitter in this portfolio and in this community. And so I think what that's really led to is that all of a sudden people realize that Dortmund Fund isn't just for people who want to get into VC. It's also for people who want to build. Start
a company.
Yeah.
I have a thought on there. You had this tweet where it's like, you recently tweeted like MIT dorm room to $2.5 billion in 3 years. Obviously, Cursor's at what, 40?
Their last round was 29.
29.
Post. I couldn't possibly comment on the rumor.
Right.
Yeah.
Yeah, that was the rumor.
Yeah.
Yeah, which is 10x more than the $2 billion.
Yes, sir. And a whole hell of a lot more than when we got in.
Which is really great.
Yeah.
So how does that feel that like something in 2019 was the right decision And then like, how does that help you go after deals? How does that help with reputation?
Yeah, I think like what was really special about the Cursor sort of success for us is that it showed just how extraordinary the people on the Dorm Room Fund team are. Because I will tell you, probably the most important thing I do all year is our recruiting period in the fall. And that's when we add somewhere between like a third and a half. We refresh the team with new folks who are going to serve more than 1 year with us.
And can you talk about the structure of the team first?
Yeah.
So everyone knows.
Yeah. So context there. So we have 60 current students on our investing team.
I didn't know it was that large.
Mm-hmm.
Wow.
Yeah. It's 4 teams of 15. We went national in 2020. So it used to be just those 4 cities that first round started in. You had to be on those campuses to be part of the team. We took it national in 2020, and now we've divided up the country into 4 sort of segments, right? And basically kind of tried to spread out where the sort of concentration of like entrepreneurial schools are, right? And so those 15 folks on each team are hand selected from thousands of applicants. So we have a 3% acceptance rate to DRF, which is lower than Harvard, Stanford, and Yale, all the schools that they go to. But what's really cool is that because we're so lucky to have so many talented people apply, what that means is that we can build a really special cohort on each team. And so each one of them is not just like an exceptionally smart person, right? But they are very accomplished. They're superstars in a particular area. They're often like subject matter experts. You know, they've built stuff. They're technical. They're, you know, I had somebody who was like the queen of embodied carbon, right, on our team. Like, so there's just like all sorts of stuff like that. And so basically those
and they're city too, right? Like they're not necessarily campus anymore. It's more of like city coverage or region coverage.
Yeah, it's regional. So like we have a West Coast team, which is, you know, we're always going to be at Stanford and Berkeley. But we cover basically all of the West Coast now. So like one of our killers last year was this guy, Eddie Jin, who joined us from UCSD. So it just shows you like talent is hiding everywhere.
Range.
Yeah. And Eddie just knew fucking everybody. And he's now actually at 2048 working with another Dorm Room Fund alum, Zan Ali, which is pretty cool.
What do you think is in the killers? Like what is that was another thing. Like in my head, I was like, how can a killer who's 20 or 21 see something that a like 35 or 40 plus year old partner at some multi-stage fund, what can they see and identify that person at the multi-stage fund can't at 21 years old?
Yeah, I mean, I think it's like it's that sense of exceptional, right? And in the same way that you and I remember who was like an absolute killer on campus when we were there, right? So that's the unfair advantage that we have, is that social context, right? And so for most dorm room funders, it's like context on their class, right? So if you're at Harvard, if you're at MIT, if you're at Stanford, if you're at Berkeley, if you're at Penn, like you're swimming in people that are building and that people are who are technical, and you're finding really amazing people. And so for you guys, for those folks, it's like sorting through this massive bucket. But the other thing that's happening today is that undergrads and MBAs for sure, and PhDs who are on our team and have really big networks too. But even our undergrads, their networks expand far beyond their individual campus ecosystems. And so for somebody like Eddie, he's everywhere. Like, and so
he's everywhere.
He's fucking everywhere. And so when and what's really cool about DRF is that we give them enough reps that they really hone that sense of what good looks like. And so when you let them loose, like, they're just able to spot stuff and have context. I mean, like we get some stuff right where we don't always look like we know what we're doing. But like, you know, there's a particular company that recently had like a big fraud thing that happened. And we actually had looked at that company and classmates of that founder had said, no, we're not bringing this guy in because he's totally full of shit.
Wow.
Like, he makes stuff up. And so we just don't want. And so we looked like dumbasses for a year
like
or
2
two,
years, yeah.
And now we look like geniuses, right? So it's like, you know, it's stuff like that where like they really have insight that we don't. The other thing is like, obviously I'm involved in every step of the process, and so is my teammate Maddie. And so like we bring, sort of reps and experience. I mean, I've been doing this for 7 years, and what's really cool is that like that's not the longest tenure in venture, but I have so many dang reps that it's
Yeah.
like dog years.
500
You know what I mean?
students
Yeah.
or 500 like people who have worked at your company.
Totally. The other thing I think is like that's important to remember is that these are not your average MBA undergrad students. Like I would not have gotten onto this team when I was an undergrad. Like I don't know about you, but like I was drinking beer and hanging out with boys. Like I
went to Ohio State, so
yeah, right, yeah. Like no, don't talk bad about
I'm just saying we were
go Bucks.
On football. Go Bucks.
Yeah, go Bucks.
National championship hopefully next season.
Let's go. But like this is not those folks. Like these guys are like I remember, like we turned down a guy from the Navy SEALs.
Wow.
Or sorry, not SEALs, Top Gun. We turned down a Top Gun kid this past year, which like I kind of like I was really sad. I thought he was awesome, but like we had a kid who applied one year who like had built a cancer lab in his mom's nail salon. Like the shit that these guys are doing at 18, 19, 20, like most people don't achieve in like a full career.
And this podcast is brought to you by Gunderson Detmer. For over 30 years, Gunderson Detmer has represented what's next. Built exclusively for the innovation economy, the firm is the #1 law firm in venture capital globally, partnering with leading investors and groundbreaking companies from start to scale. Learn more at gunder.com. I have a question because I have this question around off-the-grid founders or off-the-grid builders, if you will. I think I had read up that you were not excited about finding people who were related to student organizations on campus. You're like, that's just whatever. You want to find the folks who are off the grid building things, who are doing cancer research in their mom's nail salon.
Right, yeah.
How do you find the off the grid folks? And then we've done some off the grid things. Like those people don't necessarily act like the typical folks that go into investment banking and consulting. So there is a unique type of environment you have to create and rules that might flex.
Totally.
So how do you handle that?
So, well, first of all, I want to be clear, like, there's a difference between, like, your garden variety entrepreneurship center and, like, something like ACES at Stanford or, like, the guys at Prod or, like, even Yale has this cool, like, Hill House group that was started by a dorm room funder. So, like, there are campus organizations that we do really pay attention to and, keep an eye on and often have members of those communities on our investment team. But like what I'm not going to, for the most part, is like pitch competitions, right? And I think that that's because like in our mind at DRF, there's sort of two kinds. There's like folks who want to learn how to be founders, and those often tend to be in those like classes and in those programs. And then there's folks who sort of just already are founders, right? And so we're much more interested in those folks that are already founders, right? And so they're like in their room tinkering instead of going to some,
pitch competition.
Yeah, or like entrepreneurship 101 shit. You know what I mean? Or like, and I think the other thing, and this is again like kudos to Josh Koppelman, like he has this whole theory about getting off the conveyor belt, right? That like the US education system, for better or for worse, kind of is a little bit of a conformity machine, right? Like
industrialization, factories,
yeah,
all that.
Right. And I mean, and that's why you have the like, winners go to McKinsey and iBanking, right, thing. Because it's just like you take the next step in whatever success looks like and grabbing the brass ring. And so we're less interested in that personality type than the ones that have sort of intentionally gotten off the conveyor belt and done weird shit, right? And so like when I look at applications in the fall for who makes a great dorm room fund partner, like I like to see people who like, have built a couple of weird projects. Almost everyone on the dorm room fund team had like a sneaker resale business at some point, right?
How
like
sneakers are just so popular. Even like the Mercor guys, like we
yeah.
looked at another college dropout, and like the sneaker bot is almost like the fastest way to raising a C round.
It's a really great like signal. But like, or like started some club or some program or like, I did a weird thing like
I was an eBay power seller.
There you go. Yeah.
I sold everything. Sneakers, my saxophone, iPhones. I sold Abercrombie, Hollister, Ohio. Right?
Well,
they're headquartered here, so I gotta say.
Yeah, those are some good Ohio brands. Shout out to our millennial nature. But
exactly.
Yeah, but I mean, like, I was like a quiet cult builder in third grade. Like, that's a whole nother story I can tell you about another time. But yeah, you look for the kids that do, and the students that do weird shit. And oftentimes those are the ones that are thinking really creatively and aren't falling into what I would call like the resume stamper bucket, right? Which is like, I just do the next thing that's like good, that has like social acceptability. Because like, to build something truly transformational, you have to have like kind of a unique insight or like a contrarian, not necessarily, I don't like contrarian, but like a different, like a unique perspective on something. You have to be crazy driven, right? And you have to be willing to do something that's different and hard. Otherwise, everybody else would have built it. And so you want folks that are comfortable with that, like bucking the trend, don't need the sort of social proof to like take risks and do things like that. And that's true in our founders, and that's true in the folks that join our team too.
Yeah, I want to double click because we basically talked about how you guys picked the dorm room investment partners.
Yeah.
We didn't talk about how we teach them to see and why they pick. So you talk about potentially not picking the guy from Top Gun, which totally
like Top Gun guy, if you're listening.
Yeah,
love
next
you,
year.
Yeah, apply again.
But how do you teach those individuals who they should invest in and why they should bring folks? How do you teach them those values? How do you teach them like what to look for? And then how do you teach them how to iterate?
Yeah.
Potentially when they make a bad investment decision.
Yeah. I mean, one thing that LPs often ask me is like, well, how do you make sure they know what they're doing? And how do you like make sure that like you're not just like reteaching them from scratch every year? And so it's a combination of culture, strategy, and tactics, right? So like on the cultural level, we at DRF have cultivated like a very, very intense sort of set of cultural norms around like what, how do we operate at DRF? We did this sort of Twilio. There's this great first round review article. I mean, you can take the girl out of first round, but you can't take the first round out of the girl. But there's this great first round review article that from the founder of Twilio about like setting up your company values. And like we did that as a community, and it was like really enlightening. And so part of it is that they come in and they sort of are surrounded by this really incredible alumni community and the returning students from the previous year. And so they're very quickly glomming onto like, oh, this is what good looks like. This is how we treat founders. This is how we get to the bottom of what's true and what's real, and we avoid the sort of hype cycle. We also have a cultural no chumps rule.
No chumps.
So we have no chumps at Dormer Fund. So that's the sort of cultural part. And the other cool thing is that they can, with 500 alums now who are partners at all the best funds and are, multi-time founders. And I mean, it's an insane community. They get to pull on some of the smartest minds in the ecosystem to ask questions and due diligence and learn from. So we're really lucky there. The sort of strategy is around like making sure that we never have a fully new team, right? And so in any fall, we're adding, like I said, between probably half and a third of the team new. And so what that means is that the returners have already got at least a year under their belt, and they're coming in and they know what good looks like, and they know how to run an investment process, and they know how to do diligence. And so what's cool about that is that means we're staying in market even when we have newbies, but they're also modeling and teaching because we have this kind of, it's like almost like fraternity or sorority, like bigs, like we kind of do that. And then it's like tactical, right? So then the technical side is, we have proprietary curriculum. We have, for our fund one, which was we raised in 2021 when we spun out as an independent fund. When you're raising fund one, it's really like people who really believe in you, right? And so we were really lucky to have some incredible GPs as LPs in our first fund. And so those folks continue to stay really involved and like share their knowledge with the DRF crew. And it's totally a two-way street because they love meeting the DRFers as the DRFers send them stuff. So like, but basically you're learning venture from the best in the business, right? And you're getting a ton of reps, and we force them to, there are requirements around how many like pitch calls and founder meetings you have to shadow before you're allowed to do it on your own. And so we've built in all of these systems and mechanisms to make sure that like the institutional knowledge continues to get handed down. And what's really cool too for me is that like, when I started at first round running DRF, I had never been an investor before, right? And And I was super clear with first round. I was like, I know how to run this whole thing, like from an operational perspective, but like forget it if you want, But so they gave me a ton of training in-house. But also what was really cool for me in the early days is I would like invite these speakers in because they were people I wanted to learn from.
Mm.
And so what's really neat is that like I also get the benefit of like every time we bring in somebody incredible to teach us, I also get to listen to that, right? So like, Chris Dixon's come in and Mike Maples and Hunter Walk and Josh and the gang and like, Ben's son has spent some time with, and it's just like absolute monsters and Miraco who are just, sort of invented the game. And not only are they getting the benefit, but me too.
Well, let's talk about fundraising too. You
Yeah.
talked about the team turns over, building this institution.
Yeah.
I'm curious how the narrative might have changed over the few years where you first were like, hey, like we should just invest in a lot of 18-year-olds, if you will.
Yeah.
Long story
very
short.
few 18-year-olds. We don't actually do that
20,
freshmen, but
21.
Yeah, there you go. Yeah. And some like real ass adults who are PhDs and things like that. But
I love that. But like, how has that changed and how has that pitch evolved over time?
Yeah.
And I think I agree with what you were saying earlier. Like there was a period of time where it's like Stripe was like the poster child company of young people, maybe even Brex as well.
Sure.
And then there was just like a quiet period where it was just like second time, third time, older entrepreneur, if you will. And then in the last 2 or 3 years, like it is just...
You're no longer exclusively looking for like seasoned operators that are second-time builders.
And maybe later on, but like
for sure.
Not 0 to 1.
Yeah.
We almost want people doing it, taking the naive route.
Yeah.
To go do something.
Beginner's mind, man. Yeah, totally. I mean, I will say, so like I said earlier, like it's definitely become a little bit more consensus. So I get fewer like, what the hell are you talking about? Like, why would you do this? The question I get all the time now, which I think is really funny, is people are like, so are you doing high school? Hell no. Like, and I want to maintain the ability to change my mind about everything. Like, 'cause that's just how I live my life.
Flexible.
But right now, what I will tell you is it's really hard. I mean, you probably know this, but like our prefrontal cortexes aren't done cooking until we're 25.
It's physics, people.
And so I just think that there's actually quite a big gap between folks who are in high school and people who are in college in terms of like life experience and like, maturity and sort of executive functioning skills and like, basic stuff like that. So, we're definitely not running like DRF high anytime soon. But I think like, first of all, in this market, LPs are recognizing that the venture landscape is shifting, right? And like no longer can you just sort of like launch vanilla seed fund number 453 and expect to like 10x your fund, right? It's just a lot more competition, and I think the other thing that sort of really sophisticated LPs have realized is that like in today's market where there's so much more money available and there's so many more players that the place you want to find people is where there is like information asymmetry still, right? And I think pre-seed is sort of one of the last vestiges of where the market hasn't gotten perfect in the sense that like everybody knows everything everywhere, right? Like I'm always having these like service providers try to sell me like, oh, we'll build out your data, and so you can know, and I'm like, no fucking way, because they're pre-seed companies that like, nobody knows anything about, right? So, and I think there's a recognition that like in today's market to win, you either have to be incredibly price insensitive, right? And I think that favors the sort of bigger funds, or you have to have a completely captive pool of talent and access.
Attract, almost, if you will. That's what I'm thinking about Harlem. It's like you really have to be able to attract a certain type of fit.
The gravity thing, right? Mm-hmm. And I think to your point about the like DRF glow up, like, once you've had a few hits, you do get some gravity of like good founders want to work with you. But like, so I think in recognizing that, I think DRF is in a really unique position where there aren't that many people in the market today who have a truly novel, captive, set of opportunities that they're not getting from somebody else, right? And so I think for us, like we have the information asymmetry. We've been doing this since before it was cool. We've built this flywheel that's just like screaming, right, in a good way. And so I think like LPs are realizing that as venture matures, like we're in a really special place. I think the other thing that all of us are grappling with, and I'm sure this is true for you guys at Harlem, like, in the old days, you if you were a seed investor, you bought your equity and you sat on it, right? And then at the end of your fund, everybody either like went public or got acquired, right? And like, so that was kind of the job. The job was really the picking. And I feel like in today's market, so much has changed about what outcomes look like, right? Companies are staying private longer. They're raising more money. We still don't know what the IPO market is going to look like, right? Like, shit's crazy in the economy. And so LPs are looking for investors who are more sophisticated about the actual like portfolio management component of it. And so I think if you're one of the cool things about being a pre-seed company, especially or a pre-seed firm, especially one that isn't leading rounds, we have a little bit more flexibility when it comes to liquidity, right? Because to your point about a 2.5 billion post, that's already
we're solid.
Right. That's a 100x markup, hopefully. You know what I mean? Like, yeah. And so, what that means is, and then the other thing is because we've been a ride or die with these founders, and because we don't have a lead position, if we want to take a little bit off the table, it's not seen as a signal in the market, right? And so it gives me a lot more opportunities to be thoughtful about, giving my LPs a risk-adjusted return vis-a-vis like, thoughtful secondaries, and like the secondary market has matured so much, thinking about like, and like paying attention to DPI in a way that I think very few firms are lucky enough to do.
Yeah, that's really interesting. I'm curious maybe to end to think about like, what does DRF or dorm room fund look like long term? I know there's like this talent is everywhere. I assume maybe there's larger funds or other products or strategies.
Sure, yeah.
I'm curious what it looks like 5 or 10 years from now. How do you think about growing the team? How do you think about like, does 8 go to 18 or does 8 go to like 80 in terms of the unicorns?
Right, yeah. I mean, I think everybody always asks me like, are you going to do like DRF Europe? And it's like, I don't think that's
not
like
be the best
most
product.
Logical. Yeah. I think we still have some ground to cover in the US, right? Like we only went national in 2020. We just added Waterloo as one of our campuses like 2 years ago. Like
North America.
Yeah. I mean, like Canada's got some good shit popping. And actually what they've done up there from a policy perspective for founders is pretty cool. But, I think we still have ground to cover here in the US. And, one potential pathway for us to sort of grow is like, are we doing like a 5th team? We probably have enough deal flow to do that, right? Like, so there's that. I think I also, I'm still early in this investing in alums game, right? So anybody who's been on the Dormer Fund team or has been a Dormer Fund founder is forever eligible for Dormer Fund money, right? And those are the checks that I'm writing myself. And so that population continues to expand. And so, but we're still really in early innings. And so I could see that being a larger and larger percentage of our portfolio. And then I'm thinking about, I've got some tricks up my sleeve on sort of next products, right? Ooh. Like, we're maturing as a fund. So, giving our LPs the opportunity to follow on, we're lucky enough to get multi-round pro rata usually. And so most of the time. And so, we're running out of reserves probably at Series A. And so that gives, a ton of opportunities for us to do some SPVs, and that sort of earns us the right to get some more opportunities down the road that way. We're thinking a lot about how do we activate the alumni network even more. And so, is there a chance for us to sort of, because they're the who's who of venture capital and founding, like, how do we sort of enable them, especially the ones that are not professional VCs, like to continue to get to, potentially deploy capital and like invest in awesome people. So thinking a lot about that. And then I think the other thing is that like, we have a lot of alums who are really, really early stage and maybe not ready to build or to raise rather, but are ready to build. And so like thinking about how we capture that community. And so I think there's a lot of growth for us. The other thing is like we're still in early innings in terms of like our investment strategy as an independent fund, right? So for Fund 1, it was really about just showing, that we could, right? We were going from this like itty bitty little like throwaway safe note to like, we're writing real checks to Fund 2, which we started investing out of in April of last year. We've increased our check size to be more meaningful to founders. And so I think we probably have a little bit of headroom there still. So there's a lot of strategies that I'm excited about. We have this flywheel and there's so much opportunity. And so our job is just to like build all the tools that we can to capture those opportunities for the betterment of DRF and our community and our LPs.
Actual last moment. How do you think about young people and AI overall? I'm surprised we actually didn't talk about AI in this conversation.
I mean, it feels kind of obvious. Yeah.
But some people really think that it might be bad for this younger population.
Yeah.
I have a different perspective. I do think that democratizing this opportunity is now giving people way more options.
Yeah.
And it goes from who you were connected to like, what are you willing to do? How much agency? Because now we all have PhDs in our back pocket with ChatGPT and Claude.
Yep.
So maybe the real last question is, what's been your viewpoint on how younger folks, especially on college campuses, have been adopting AI? And do you have a thesis? Do you have an understanding? Are you excited about what they're doing in AI?
Yeah, I mean, it's really interesting. So I was talking to one of our alumni the other day. Actually, it was Tony Oloco. He was like, Molly, what? Like, are people like our college seniors worried about getting jobs, right? And I think it's such a reflection of who we get the privilege of working with that anxiety does not touch the DRF ecosystem, right? I mean, the people in Dorm Room Fund are so excited about what's possible with this new technology, and I think we're really in a golden era of, first-time builders being able to achieve astonishing things with very little capital and, very few teammates at the early days. And so I think for now, it's very much an optimistic view. And so I was noticing on reflection after that question is like, I don't have personally that sort of AI dread. And maybe I'm definitely a chronic optimist. I think you have to be good at this job. And like, maybe I'm being naive, but like, I'm just still so excited about what's possible with what we're building. I mean, for Christ's sake, like there's projects out there that like, SETI is one of my favorite examples. Like it's, can we learn how to talk to whales? Like that shit's amazing. Like the diseases we're solving. I mean, like one of the founders we invested in, there's so much drug discovery happening right now that there's actually one of the blockers is first-line cellular testing.
Wow.
Like, because there just aren't enough labs to do that work. And so it's like, how do we sort of speed that up? And they have a perspective on that. And so to me, we're certainly, I think, still a ways away from human in the loop. And I also think it's really interesting to see what's happening with sort of AI native services businesses where like there is a recognition that to be excellent today, you still need a human in the loop. And like, obviously the goal over time is to make sure that you don't like, and so that will have long-term effects. And like, am I worried about the Indian economy? Yes. Right. Like, am I worried about the like Filipino EA machine that works for the United States companies? Like, yes. Right. Like there's, I'm not saying this isn't without like cost, but I think for the people that I get the privilege of working with every day, like it's the sky's the limit still.
Wow. Molly, thank you for coming on to the pod. We'll have to have you back on soon.
Thank you for having me, dude. A real treat.